What's going on, everybody? Hello, everyone. Thank you for joining. We are about 31 people here. That's great. And it's weekend. Proud of you all. Reminding me myself, I never, ever, since I started Forex, had any fun in weekends because that's what average do. And who want to be average? So let's start it. What I have ready for you guys here today, it's about Candlesticks story. So what I mean by Candlesticks story means I'm going to show you how you can use your knowledge of market structure, mix it up. I wanted to put the name for mix it all, but I thought Candlesticks story would be better. But I want to show you how you can mix all your knowledge from weekly structure to daily structure, signature trade, everything, and use candlestick to get confirmation, not any indicator. Especially because this session going to be on YouTube, and there will be a lot of people who don't even know our method or how we trade. And so to you guys, I'm telling you that we don't really need these averages to trade the market. We can trade this based on naked chart. And now I'm going to show you how these candles can literally talk to you and let you know what is going to happen. And you can actually enjoy trading with the lowest drawdown and quick, tightest stop loss using these moving averages, and you can trade it. Doesn't matter what time frame you use, structure always stays same. So let's start it I'm going to show you, I'm going to work on Australian dollar, USD, and doesn't matter, you can see these patterns all over the place, doesn't matter which pair or even which financial market you're looking at. That's the good thing. You can trade cryptocurrency, you can trade commodities, you can trade stocks, and obviously currencies. Doesn't matter, exotic currencies, USD pairs, whatever. Anything that you can buy and sell, and there is going to be a chart for it, you can literally trade it. You don't need to look at um, any kind of fundamental thing. You know, you can just be aware that it's coming, but you don't need to go read the news, be updated that who's talking, who's sending a tweet. None of them matter. I'm the example, and my students also are example that you don't really need to know what is happening. So many times we are in a trade, and afterwards we hear that, oh, the trade you just was about the tweets that was coming, or this person, you know, said something or whatever. It doesn't matter. As long as you see the patterns, that's it. All right. So the first pattern that we always talk about is pump and dump, right? Which is, I would call it, and we would call it weekly structure. In weekly structure, you know that price will continue in a direction in order to trap people, make them believe that this is the direction market is moving, and just when they believe is when they reverse the market on them. All right, so we got this pump and dump right in front of our face right now. Very good example. Took 2 weeks. It's not exact, it's the 1 week of dump and then another week of pump. Okay, so another pattern is important for us is M and W, more in a form of daily structure, which is, this is the case of bullish, and in the case of bearish, it would be breakout to upside, setup, and then come back and day in consolidation. Just with what I draw here for you, we can draw a trend line. This is why daily structure is very important, because this is how literally trends are being created in day-to-day basis. Market is fractal nature, and with what I draw, the I know there is people right now in here that they are trading traps of trend break and retest, and you can see using daily structure everything comes and sit in place. You literally can understand daily structure and draw a financial market for yourself. It's not going to have any different with what is happening right now in the financial market. So forget about bullish power and bearish power, and think now more about patterns and structure. So we got this pump and dump, we got our M and W. I reminded you everything, daily structure. So now let's find out first which day we could see these patterns. All right, first I start from here. What I see, this is a daily structure, and then we got, oops, then we go one here, another one here, and then, oh, not this one, so I can put this here for now. And one more here, and one more here. So you can, by understanding one and only one pattern, you can literally draw the financial market. Okay, so now I'm going to add moving averages. How can I use these moving averages? So you know about when market break a moving average like this, and also you know when market respect it, this is a respect. Market couldn't even pass further to leave the wick there. So this is a great respect right here. Okay. And then we got something like this where it's rejection. Remember that these moving averages, the good thing about the averages is that we are not drawing it. This is very important for me. You know, on anything I ever created, from DMA hack to Fibonacci, the most important factor for me was that I do not draw anything on my chart. I do not believe market can respect a little trend line I draw on my MetaTrader or TradingView. So when retail trader says, oh, the support was rejected or trend line was respected, I'll be like, how can you say that? How can you be so, I don't know, I can't even say anything. How can you think like your little line can control and make the biggest financial market stop and reject? That doesn't happen. But when financial market close the price in every 15 minutes and then give an average, depend on what period of moving average I am going to use, then this is not when price stop where a moving average is. That to me is something that price can respect, reject, or break. So you have to be careful about what are you taking as a setup. You have to see market react to something you draw, or you have to see reaction of the market to something that is already there. You didn't draw. It's some sort of calculation or whatever, but no, not something you draw it, you know, average of price. Why not? You know, some people argue with me that, oh, you say not using indicators. I'm going to talk about it now because it's going to be on YouTube. So to those great comments that was telling me that moving averages is also an indicator, yes, but I'm not talking about don't use a tab that is right here. It's more like an understanding. Understand what indicator you are using. You are using an RSI that you don't even can say how that exactly calculated. If you can calculate what that indicator calculating, then I'm fine with it. If it works for you, I'm okay. What I did on my moving averages is I studied it, how it works, try to calculate it myself, and then add my own knowledge into the market, calculate it the way I want it, and it works perfectly. So don't argue with me that moving averages are an indicator. It's an indicator that you can use it by your own rule. That's what I'm saying. I'm not using 14, 50, 200. This is what it's right here, and I'm going to show you, but this is not what I'm using. As I said at the very beginning of the webinar, this is what average use. And who want to be average? So really, in any aspect, I don't want to be an average. So this moving averages, I'm just showing you how I can even make 14, 50, 200, and this one is 800 work for me. This is what everybody use. So now I see my own setup. I see the zone that was respected based on what the money do and trap patterns. I have all the videos. If you're not familiar with it, just go through it. Market create a zone, break it, acting as this zone is broken, retest it like it's continuing the, the move. But what it's happening in here, price break the 14 moving average, break the 50 after a bit of a time, you will see moving averages cross, and then prices start respecting the 200 average. You see, respecting 200 average. So this to me is talking to me. These candles are telling me, wait, right now I don't even know what I want to do. I want to stop at I cannot break 50 and I cannot break 200. So this is just an indication for me to stop and wait, patiently wait. So I want to see break of 200 before I make any decision. I already have my bias based on market structure, because from Sunday, Monday, Tuesday, price formed higher highs. Now the zone, the high of week was broken, trapping people, inducing them to buy. And I think price is going down, but I'm waiting. Why? Because I'm not having the confirmation that I want based on candlestick story. So candlestick story is where price break the 200 in here, in this case, break the average, and then cannot break that average as well. Any of this is a sell confirmation for you. Your stop loss can be at the high of the day, which is 10 pip. Well, my minimum is 10 pip, so let's say 10 to 15 pip, let's say 12 pip, you would easily hold this move. With important factor of session timing, just before London session, the break of 200 happened. Price start trapping people, holding the price. I'm just going to remove this. Holding the price in the level that retail trader believe it's important. Look, this is what they think as a support. It's being held all this time, and then once New York session open, price make the move. Your last confirmation was this, based on buy a sell candle and sell a buy candle. You could wait for candles for a day and a half, and you can see from here to here, you're not, I would say, it worth to leave this on the table, this 20 pip, and get a good confirmation. It will increase your win ratio very much. Instead of trying to catch these holes 80 all the time, wait for a better confirmation and catch the 60 pip. It's all good. The pip is matter, right? So now what happened in here, 800 moving average was broken and it couldn't move any further, continue moving down. So now we have the 800 moving average broken as well, right? So now we can say peak is set. Market trap people moving down. Price was seeing a very bullish run from previous weeks as well. So we're kind of know that peak is set, especially when high of previous week also, right exactly what I was showing. High of the day was almost high of the week too, was broken, retested all this time here that I was showing the signs that we are going to see sell was actually a trap of peak. So now this peak formation is kind of set, or all of our averages, 50, 200, 40 and 15, sorry, 14 and 50, all crossed down. now it's kind of confirms that peak is set. Again, we're not going to get the confirmation that peak is set based on these averages. But anyway, you can be kind of, you can take the risk based on 50 and 200 cross down, and what you want to see. You want to see the next pattern that is coming to play, daily structure. You want to see a daily structure that now respect your averages. If you could see this, which is right here, respect the 800, price comes up, form a setup, leave a wick at 800 moving averages, and then now again, you can use different kind of candlestick confirmation here. One is rejection here, but let's say you could have trusted because of the cross of 14 and 50. All right, cool. Wait, 14 is broken. 50 is broken, retested. That's a sell confirmation for you. Again, they failed to break it. Now you got a cross. Now you got candles below 14 and 50. So another sell confirmation for you. There is a saying, 20 people a day leave a job away. So right now you can see from 60, 16, and let's just show you here. You can see that same almost story happened. These crosses, all crosses happen. Daily structure, respecting these averages, leave weak, fail to break, come above, retest it, and you could have get this all from start of London session. So now you can understand better how to use these averages and how to read what candles are telling you. If a candle can't break it, now this is also come in place. The candlestick, basically that's also candlestick confirmation. But in this case, let me make this green and let me make this red. So this is one of the most important candlestick confirmation that usually is very powerful, engulfing candlestick. And when you see this candle, a lot of people taking this candle through their support and resistance zone, it breaks my heart. But why you don't want to use it when you can see it around the moving averages? In this case, it respect and show you the bearish power, or in this case, it will show you that they failed to break the average. They broke it and then came right back down. This is very important. Which first example? This one. 3 days behind. So it's going to be 1, 2, 3 right here. The buy. Okay, right here. All right, what do you want to know about it? You just want to see? Okay, yeah, it's a great example. So let's move it to, right here. For this engulfing candlestick happens right here now. That little bullish comes with a big bearish candle closed below 14. You can risk it with 10 pip stop loss, guys. It doesn't hurt. So now you can see how I'm showing you different kind of example on different kind of setups, but how I get the same confirmation using just candlestick, nothing else. When I don't see any candlestick, even rejection, and whatever it is, it's all respect. Why in the earth I want to buy? You think you see this as a W, you see whatever, however, New York reversal or whatever, you see an engulfing candle close below 14, Don't let them eat your money with this one candle. Just get out of it here. This candlestick story is not only about entry, it's more actually about how to manage your trade. It's very important, guys. You can manage your trade using candlestick story by getting more newer update of market. You were thinking that market is gonna go up, but candlestick are talking differently. So if you took a risk, you're not in a big loss, or you're even in a little loss or a little profit, and candlestick talking to you different with what you think, just trust them. You know, use the knowledge, all you know about market structure to daily structure and everything else, and add the averages to kind of get a better understanding for yourself of what candle are doing. Because you can go all draw this trend line and zones and think that price is respecting them, but this is not what actually happening. So let me show you a case like this with the 14 pip, 15 pip stop loss. See price aggressively break the 14, break the 50, retested. Let's say you bought through this retest, and then price came back below. This is the case that, you know, if you listen to these candlestick stories, you might want to miss this, but it's all good. This is because you're using 14, 50, 200. You know, if you want to have a better average, join Forexia Academy or my mentorship. You learn the DMA. This is not happening on DMA, but you could get in here when you get a buy signal. Where is my buy signal, Human? Are you out of your mind? You don't see the bearish momentum? I see. But I see at the same time how retail traders are seeing this as a sell. So when I see candles are coming above 1450 average, I'm thinking of a buy. Because now average selling, everybody's selling. Why do I want to sell? So when I see my confirmation, I'm looking to buy based on a structure, and I get to the time by understanding of my candle, what candles are telling me. All right. You can still, I'm telling you, you can still miss this because it broke below its averages and you thought it's going down. It's okay. You have to backtest so much so you don't get trapped in here. You can see this is the other trap that they created. They came above and then went below the zone that they just created, and then boom, got all their money, come to the next zone they created for them, acting as they're not going up, but what happened? They continue going up. So now again, these crosses happened. We are looking for a daily structure. We are looking for a good W formation, candle rejection to buy. So this is a good rejection through 50. So price, see, I just showed you the trap. What happened to the trap? Let's say we missed the shift 2. What am I doing in here? What am I waiting for? I see the cross. I see the other cross. My bias has been changed from sell to buy by just seeing this shift against retail trader. Okay? Against retail trader, I'm waiting to see, I'm not buying now, I'm waiting to see a good rejection, a good setup that I can count like a W formation or daily structure or a signature trade, so it can confirm for me that it's going up. Now I'm seeing that price broke 200 as well, start rejecting it. You see, rejecting of 200, that means wait for your setup, first leg and second leg. Why second leg here? Because of my candlestick confirmation, and I just taught you guys, engulfing candlestick closed above 50 and then respected. You see, again, rejected, retested the 800 average. So this is a buy confirmation and it goes up. All right. In this case, again, price came below 1450, 200, 800 are down here. Then price go back above, start retesting it. Then because I see price all price are all above the averages, then when candles start breaking it and retest 1450 again above, I'm more looking to buy than sell. All right. So again, EMA rejection engulfing closed above 14, you can buy. Personally, I don't wait for this engulfing. I buy a sell candle and sell a buy candle. But I'm not using these averages. So if you waited for engulfing candlestick, you're just doing a favor to your money and your trading account, that you're waiting for your candlestick confirmation. Okay, so now this week, you see, was bullish. All right, now I want to see some trap. So this trap going to help me find where price is going. Price created a zone, went above this zone in Monday. So what the money do? What the money do in here? The money would buy. Why am I not buying? Very beginning of the session, of before London session, you can see the EMA crosses down. Price now failing to break 50, failing to break 200. So you wait for a little more confirmation. It breaks completely the 200, retest it. So now you know that you can sell it. Another one, again, daily structure comes up, respect the 200, engulfing candle closed, you see, engulfing candle closed below 14, boom, boom. This is literally enough, guys. This is enough. I know it's 12 pip, but if you can take trades that give you this kind of profit, you open the trade, you're in middle of the move and you finish it at the end of it, that's it. You don't really need a lot of pip. You could have even hold it for like 20 pip maybe. So let's delete this and draw these two trend line that came where this is an induction. How can I know this is an induction, guys? Someone tell me in the chat why this is an induction. How can I confirm? Damn right, to the 800. When candlestick story tells me I'm rejecting, see, I'm respecting it, okay, and now I'm rejecting it, okay, and now I'm retesting it again. So if you don't buy, it will just run without you, 25 pip. So this was an induction, price came above, end the day in consolidation. Again, this was a news, clear the board, whipsaw, probably FOMC. This FOMC was made the price above the 1450, 200. You already got the 1450 cross, and now you have the retest on 200, easy buy. Easy buy. And then all this retest that are rejecting DMA, oh my God, EMA, all these retests to EMAs are a buy confirmation for you. But let me tell you at the same time what retail trader think. Yeah, you think they're smart? I don't know what you think, but look at this resistance. All right, so price, let me just put it in drawing mode. Boom, 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 and then boom, boom, boom. But This is how retail trader drawing the line, analyzing the market, drawing their Fibonacci. This boom boom is all good before the liquidity zone around here is all gone. This is the liquidity pool right here. Oops. Any question, guys? I got 2 minutes, so I hope this lesson help you guys, mix all this, in a one simple rules of getting a candlestick confirmation based on candlestick, not anything else. And this is one of the lesson. If I would had myself when I was learning, I would watch it 200 times and back test it between each time of watching for more than hours, because this is very important. The candlestick story is very important. Get retest on your time frame. Yep, the fractal nature of market. Do you trade each pair independently, or you look out for correlation? Sometimes get confused. For example, when my setup entry for GU says buy, and at the same time my setup entry for GJ says sell. Do you take both trade? Because when GBP is weak, I think only sells will hold, right? What should I do in such case? I would say don't care about correlation if it confuses you. Personally, I use it sometimes, but if I get different signals, I would just leave both of them away. I just don't touch both of them. What retail do assist me to see why market maker do what they do? Thanks. I got less than a minute's time. If I could answer it, I will. Thank you guys for joining. What retail do assist me? Understanding what retail see will help you to find and identify patterns of trap very much easier. That's literally it. If you know what they see, you can just go opposite. That's it. By respecting to 800, I figured that they're